I want to start today's video by announcing that I'll be starting a subscription for my YouTube channel. If you like the content and you want to support me, go ahead and subscribe. It's just going to be a couple of dollars a month. What I'm going to be including in the subscription are my weekend videos. So that includes monthly and weekly charting of stock indices, commodities, futures, cryptocurrencies, and also my investment positions. Now, my day trading in AMC, this isn't really investing for me. This is trading and playing. And if you've watched my channel, you know that. So I actually have recently entered into a long position, and I am starting to hedge and manage that risk. I'll be including that trade and all of those details in the subscription videos as well. So please consider subscribing, and let's get into the daily update. Here we go on the daily charts, IWM, SPY, VIX, and AMC. Let's talk about IWM. We did have this bearish doji star candlestick pattern. It's a 2 candlestick pattern. That means that there was 2 days involved, the big green day and the doji. The pattern confirms if the price can close above or below it. Today we got neither. If the price were to push up a little higher, that would have given us a confirmation of that bullish continuation, that really sweet 69% chance of bullish continuation, but we didn't get that. Instead, the price rose and reversed and then, fell much lower before closing. However, it didn't close outside of the pattern still, so that is to say that there is still an opportunity here for the price reverse one more time and pull back and try to finish its rally up towards the resistance overhead. However, there is a couple of gaps to fill down below, and GDP data that is coming out tomorrow, the final Q1 of 2022 GDP data could be negative and send the markets lower, in which case we're going to have a confirmation of bearish reversal. So a small red day on IWM tomorrow is going to confirm bearish reversal. We're not there yet, but we are almost there. That will bust that bearish doji stick candle pattern, and we'll be looking for a new low. SPY, same story. We didn't have the same candlestick pattern, but we did have that big day. I think the level for SPY to close below in order to confirm bearish reversal is 376. The price to close below to confirm bearish reversal for IWM is 170. VIX did increase today, as we did see big, long, black days, big red drops today, and that makes sense. This was the most bearish forecast for yesterday that I gave, that I said that if we came out of these consolidation phases heading down, that volatility would go up, and that would be bearish. So I'm looking for more downside the rest of this week. AMC forming a small red day as I anticipated, and it found some support on this internal trend line. Overall, I have to say that yesterday's forecast was very informative and was very helpful today as I watched the charts. Let's break down AMC, IWM, SPY, and GameStop on the intraday charts now. Moving over to AMC, I have my Elliott wave analysis pulled up, and I was expecting a drop today to the 61.8% retracement level at 1366, and we did see exactly that. And I see this as a reverse triangle, as a corrective phase of wave 4, minuet wave 4, and that this dump to the bottom of that wave forms an A and a B, and we're looking for a C correction. Of course, I think that this A to B, this is our truncated 5th wave. I would have liked to see the 5 wave come all the way up to 1475. It did not. This would be the extent of the 5 wave if it were to be truncated. If the 5th wave were to pass above this level, we'd be bullish, and we're looking for more price action to the upside. The furthest that the 5th wave or the 4th wave could have dropped would have been 1256. After, if it were to move past that, that would have just been a bearish reversal. And the price really didn't touch either of those extremes today, really just hugging that 61.8% level. And if that made any sense to you, congratulations. Now, yesterday someone commented that my analysis makes a lot more sense when I stick to Bulkowski patterns. And the truth is that Bulkowski's chart patterns are Elliott wave patterns. But let me describe this in a way that makes sense for those that are just purely aware of Bulkowski analysis and not Elliott wave. So I have the patternsite.com pulled up to my or above me, and we have Bulkowski's page on flags. If you look at this page, he says to not enter into a trade on a flag until the price can cross the top of the flagpole. So if you look at this, Elliott waves, minuet wave 3, which ends up here actually. See 3, minuet wave 3. It has 5 sub-minuet waves. And that forms the flagpole. So this is just the flagpole. Minuet wave 3, and its 5 sub-minuets are just the flagpole. Easy peasy. And there's little flags inside of here too. That's called fractaling. Here you have a sub-minuet wave 2 forming a flag, and then you had a full move higher for a half staff formation. So think of it as flagpole, flag, half staff formation. It has a complete extension, and then it actually pushes up too high and it starts to correct. Now this all forms one bigger flag. flag pull. And then you have another flag here, and the price does appear to have made a bullish breakout, and this would have been hard for me to read as just a flag, because is that a bullish breakout? Is it? Or has it pulled back into the flag? Is it going to break up bullishly? Well, here's the thing. Bulkowski doesn't actually advise buying long into a bullish flag until the price crosses the very peak of the flag pull, which here would be the top of mini wet wave 3. And the reason for that is if the price can't get above there, it's likely what's called a truncated fifth wave, and that forms a double top more often than not. And so here we have a flag that's not break out to the upside. In fact, this would be a failure to rally and is bearish. And that's how I'd look at that in Bulkowski chart patterns speak. Of course, I mix in my Elliott wave speak too, because it just makes so much sense. Once you get the Elliott wave pattern down, it's like seeing the matrix. Everything just makes so much more sense. It's not very predictive, but it does help give context. GameStop today, finding more downside. That's what I was saying. We're looking for more downside on GameStop, and it looks like we've probably got it. I think now the big question is whether or not GameStop's going to follow the broad market as we head lower, I think. I'm going to have to take a good look at GameStop to give some more analysis from here, but just judging on what I see here, I see wave 1, 2, 3, 4, 5A, probably an ABC correction coming up, so GameStop might even pull up a little bit. That makes sense. I'm going to look at the daily chart just really quick. I haven't looked at GameStop at all today, to be honest. Yeah, chunk. That looks bad, doesn't it? Chunk. Almost vertical rundown. We have a little bit of overlap on the candles, a lot of overlap between the candles, to be honest. So it's probably not an measured move down or a vertical rundown, but I do think that this is looking pretty bearish. Let's check on volume. RSI is falling below 50. The volume trend is actually decreasing. So yeah, GameStop might be ready to put in a little bottom. Applied volatility is actually dropping on that last candle, which is interesting. I think we're probably going to see GameStop pull up unless the market's dump, in which, everything gets dragged down together. SPY, let's turn on the 15-minute chart here. See what we see. Yeah, so yesterday I had this drawn as a pennant, and I thought that's an interesting, tight little pennant, kind of small. Well, today's open makes a nice reverse triangle, okay? Or how about right-angled and broadening formation? How's that? That's a Bulkowski pattern. And we saw the price rise at the top and then plummet through that lower trend line and form a measured move down. Douche. And this could just be 1, 2, and 3 waves, looking for a fourth corrective wave. Be shallow, be a very shallow wave, and then 5 would lead us lower, and that would be our bearish reversal in action, killing this motive wave. Geez, then I have to reanalyze the whole thing again, which is totally fine. Elliott wave is not predictive. It just describes the price action. IWM, very similarly here, doing the same thing. Let's see. We did have a broadening top, a megaphone, or a reverse triangle. And again, we have the same waveform. Wave 1, 2, 3, 4 pulling up, and then 5 started and stopped. It could be truncated. Yeah, actually, tomorrow could be a little green day. That would be crazy. The charts look like that tomorrow could be a little green day. So I wonder if GDP data is mixed. Mixed GDP data, small green day. GDP data is bad, big red day. GDP data is going to have to exceed expectations a ton, which it won't, for the markets to make a big green. So I'm ruling out big green tomorrow. I think if it is a green day, it's going to be small, and we're most likely going to see another big dump, big red day to confirm bearish reversal across the board, and we're going to go in, close some gaps, and find new lows. Okay, so that's all for the daily update today. If you do want to see my weekly charts, my monthly charts, my stock index analysis, futures, crypto market analysis, and also what my investments are, you're going to need to subscribe to the channel now. And I think that's the way I want to do it. So the previous videos that I've released on the weekend, that kind of content is going to go into the subscriber member only feed. And yeah, so consider supporting the channel. I really appreciate what everyone has done for me already in following, subscribing, hitting like, turning on notifications, whatever it is. It's been a huge help for me to see the views go up, the subscriber count go up. The kind comments are always appreciated. Really, thank you so much. And I don't know. Maybe I'll do something special. Maybe I'll bring back another bass intro or something to say thanks. It's weird. It's weird vlogging and having people follow you. It is. All right. Happy trading.